One of the things that we found recently in talking with our banks about some of the solutions we're selling is we found that there's often a big gap between what the people at the working execution level want and what the people at management want. Many times the people at the execution level want a tool that will allow them to do the same thing they're doing, but perhaps a bit faster. Whereas the people at management, they're not really so concerned about the current process. They're much more concerned about getting a massive productivity improvement, whether you modify the current process or whether you put in a new process. And what that ends up meaning for a vendor or a solution provider like ourselves is it means a lot of miscommunication, it means confusion, it means delays in delivery, it means increased cost, and it also means a suboptimal outcome. What's really, really important is that the bank, however they gather information about what the optimal outcome is, the bank has to set the business objective. They cannot expect a vendor to supply the business objective and then decide if that's good or good enough. They can expect the vendor to supply a technical solution and decide if that's good or good enough. But the business objective has to originate with the bank. If the bank wants to use the vendor like us to gather the insights about how other companies do it, if they want to figure this out, that's cool, that works. But the bank has to make the decision. They should not rely on a third party to talk about a technology solution, business objectives. They need to own the objectives because they're the ones that have to use it. And they need to define those objectives before they contract a vendor to discuss how to build it and how much resourcing and how long.
Did you want to talk about how our tools are flexible enough to accomplish
Absolutely. So, when banks end up defining a need for a technical solution or a business solution that involves technology, one of the things they have to grapple with or think about is to decide whether they want to take something off the shelf, to make something totally new so they own all the IP, or to do somewhere in the middle, take what's already there and modify it. If you take it off the shelf, it's fastest, it's cheapest, you have the least risk of failure, but it doesn't always fit the bank process. And so the bank has to make a decision about how important that is, cheap, speed, and modifying the process to fit the solution. The second thing is, well, they want something totally new. Highest cost, highest risk, but if it all goes really, really well, most strategic opportunity because they're the only ones that have it. But that requires a fairly sophisticated business decision. Usually what banks want is somewhere in the middle. They usually want something that already exists and they want to modify it. And the two ways that they usually know they want to modify it, one is the reports. They want the reports to fit the bank's process because that's very important. And the second thing they might want to modify is the user interface so that it fits the way they work, the workflow. It's not the contents of the material. It's not the analytic functionality. It's the way it's displayed and the way it's adapted or adopted within the organization so that the workflow fits. Most businesses like ours are flexible and can do this. Usually you want to hear the word modular, that the company has modular solutions. They can take things in, pull things out. Usually you want to know that the company has a way, the vendor has a way of making an interface that will easily adapt to the client's needs. Usually that interface adaptation relates somehow to the environment, the operating environment. So this ends up being a Windows, Unix, it has something to do with SharePoint often, because a lot of companies have SharePoint. Usually the clients will have some level of discussion about how closely this matches the current process. If the bank or the customer, the retailer, first defines the process that they want this to fit in, and they define the output second, then it's much easier to work backwards and discuss what's in it and what's out. If you buy a car, the first thing you're going to say is you want a sports car, or you want a sedan, or you want something cheap. The next thing you're going to do is you're going to look at the models of the cars that are available. You're not going to usually start off saying, I want something that's red. And you're not usually going to start off by saying, I need the air conditioning to have 5 levels on each side. Unfortunately, a lot of times what we see is companies aren't looking at modules, they're not looking at flexibility, and they're already down the road telling us how things need to work before they've even really gotten around to describing what it is they need in terms of an outcome. And if you start with the big and work down, it gets a lot easier with your vendors, and outcomes are always a lot